here is something I want us to think about as we get closer to Friday, right? So we have a couple things. We have 4 items. JOLTS job openings. This week we get a lot of jobs data. So let's map out our agenda here. Okay, so here's what we're working with this week, guys. So far, we have had JOLTS job openings come in very strong. Today, we had ADP numbers come in very weak. So it would be natural to say, okay, we have this on Thursday. We have these 2 on Friday. So we get the big one on Friday. We get unemployment rate. We get NFP. Those 2 variables are going to come in at the end of the week. Well, so far this week, what have we got? We've got kind of a mixed report in terms of labor, because you had a great job openings report, very, very strong numbers from job openings, and now you have a weak ADP number. So again, this is where we want to look at things holistically. If we're going to be trading this stuff, we're going to say, okay, this is bullish or bearish for US dollar. This is bullish or bearish for gold. This is bullish or bearish for indices, right? If we're going to be making kind of a holistic view, we don't want to just look at ADP or just look at job openings, because that's kind of disingenuous to what we're supposed to be doing here. We're supposed to be analyzing the state of the economy and what the Fed is likely to do next based on these stats. So ADP, right? What is that looking like? Well, that's weak. Job openings look strong. How are unemployment claims going to come in this week? That's actually really, really key, because last week, unemployment claims came in higher than expected. So this week we are forecasting for 236,000 unemployment claims. What you really would like to see, if you're like a stock market bull, can we undercut that a little bit? Can we get a little softness compared to that? What we don't want to see is this number turn into this kind of flat. Like, part of the bull case here for stocks is this horizontal line that I just drew, right? Unemployment claims have not spiked, despite all the worries about tariffs and all the worries about recession and all that stuff. All of that stuff, to me, you know, a good friend of mine, he may be watching the stream. He watches the streams frequently, my friend Garrett. We've talked about this for a long time, and it's a really interesting and simple concept. If you're somebody who watches stocks, Bitcoin, risk assets in general, or gold, by the way, for a different mannerism, if you have stuff, the labor market holding steady, people are employed, they can pay back their debts, they can buy new things, they can stimulate the economy. The economy is okay for the most part if the labor market is strong. But if you start losing that story, then we've got problems. If the labor market starts to materially weaken, then you've got, in my opinion, a very strong bull case for gold and a very weak case for stocks. That's my take on it. The labor market holds the key because, again, yes, inflation is important, but inflation's pretty much dead right now. Inflation's not the problem anymore. I mean, look at inflation. We're back to 2.3%. We're not too far off. You get any upset in the economy, and this thing's going lower from here. Right? We won't have an inflation problem. We'll have a growth problem. If you're talking about if tariffs make things way worse and people freak out and all that stuff, I don't think inflation is as big of a problem as the labor market. If you get, slowdown due to tariffs and CEO confidence goes down and consumer confidence, like if that actually materially turns into the hard data, we have a problem. But here's the thing. The news cycle has been so negative that it's really caused sentiment to be so in the dumpster. Let me show you. We can show you something pretty cool here. If I go to my market sentiment tools and I go CB consumer confidence, we had for the first time in a while an uptick in consumer confidence. That's a positive note.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Another one that's really important for the state of the consumer is keep your eye on retail sales numbers, right? This is people going out and spending money. Are people doing that? Well, people have been forecasting, or analysts have forecasted that this was going to go, way down, and that people were way too scared to go out and spend money. And for the last two, we've had outperformance relative to analyst expectations. So again, I see people concerned about tariffs, and the news cycle is so creepy and scary, and oh my gosh, Trump's going to ruin the world and all this. Regardless of your political thoughts on that, let's keep an eye on the data, right? I said this under Biden, I said this under Trump. It's not about the politician if you like them or not. If you're a trader, the market data can be very revealing, despite what people's, what the headlines say. Don't get caught up in that, because if you do, it's going to hurt your trading. It's really easy to make the mistake of chasing your tail with the news cycle when it comes to the markets and letting your political bias get in the way of decision making. Just trade what you see with your system and with your strategy. So if I'm looking at S&P 500, my overall view remains very confident in the S&P 500, in the NASDAQ. I currently have a long position on the Russell 2000. I'm personally watching to see today if we can break through this level of resistance. I think this looked kind of similar on the Dow Jones. Dow Jones looks really interesting. You're sitting right here at this 42,800 level. I think if you get a breakout of that zone, we are probably going to see a leg higher in this market. Path of least resistance for me on the markets, like by default right now, I think we move higher. By default, what I mean by that, none of us know if in 30 seconds from now, Trump is going to tweet something and say, China is ridiculous. All bets are off. We're going back to the highest points of tariffs. It could happen at any second. None of us can predict that. And if you are somebody who thinks you can, best of luck to you, but it's really hard to do. Even if you're right, and there is some, turnaround in the story with tariffs, what if before that turnaround happens, the market drifts higher by 5%, and then that happens, and your short position is still very red, right? So my point is trying to time what Trump is going to tweet or what Powell's going to say in response to Trump. Like, you can play that game if you want, but that has never been a consistent way for me to approach the markets. What is the default? This is what I want us to be thinking about, right? What is the default direction? What is the trend price action wise? What is the sentiment out there? It goes back to what we always talk about on this channel: fundamental analysis, which is looking at the macro like we do all the time; sentiment analysis, which is looking at crowd sentiment. We just talked about consumer confidence. We talk about the put to call ratio quite a bit and some of the timing that we can do here. We take a look at the investor sentiment survey, which will get fresh data on this at midnight tonight. So that data will update in the Edge Finder as well. So these are the things that we can look at, and we can say, okay, what's the default direction here? Momentum on the S&P 500, the Dow Jones, the NASDAQ, positive. So by default, technicals would suggest momentum should continue to push higher. At least the technicals that I'm looking at, the subjectivity of technical analysis. Some other people might say, no, that's going to tell me it's going lower. But what about the fundamentals? Well, again, I have a systematic approach to tell me, not a gut feeling, not a, I think the economy is going to do. It's based on the hard data that's coming in. Is it suggesting bullishness or bearishness for stocks right now? We're getting a stronger bullish suggested impact by the economic data. We have cooling inflation. We have labor data so far this week, a little bit mixed, right? Jobless claims tomorrow will be very telling. Last week they were a little weak, so that could turn positive for us this week if we get better than expected unemployment claims. So what's the default trade? That's what I want us to be thinking about. Is the default trade. What's the default directional bias of these markets, barring that we don't have some crazy tweet from Trump in the next 30 seconds, right? Because we can't predict that. So what I mean by that, when I say the default trade, is like, okay, if I think the default trade is higher for the S&P 500 and I'm looking for pullbacks, right? If this is my default trade setup, what I mean by default is like, I think, assuming the world doesn't fall apart, that trade should probably hold up well. But I can't control if the world does decide to freak out and maybe move like that. That would be a crazy move, wouldn't it? If the chart would start going backwards. But I can't control when that's going to happen. It's going to happen. So sometimes my trade's just going to get screwed up by news and it's going to even out, because other times the news is going to really help my trade. So the way I see it is like, focus on the general directional bias and place the trades with small size and let your trades play out over time. Like, make more money over time than you lose money. You're going to lose money in trades sometimes. Some are going to work, some are going to perform poorly. But if you are somebody out there chasing your tail about like, what's Trump going to say next, and Powell's going to say this, and you know, to me, that is not a repeatable, consistent methodology for trading the markets. Focusing on the macro data, focusing on the technical price action, those things, I can do those day in, day out.
Yeah, I've been looking at Euro Pound. It seems like a really, really solid trade, actually. Now, the problem is, or maybe not necessarily the problem, I'm a little bit late to the party on Euro Pound. We've had already pretty much a full correction of this upside spike. We saw it was almost a 5% gain, which, yeah, has been corrected very, very quickly, but that's very typical of Euro Pound. But as I always say, the behavior of this market is very predictable, really. So we have these spikes, but when we have the correction, very normally we will see the market trend lower than this initial than the initial price, obviously pre-spike. So it makes sense to go short on Euro Pound looking for lower prices. My first take profit level is wrong one, rectangle. First level for a take profit in my view is sort of down here towards the 0.82472 level. Now it's just a case really of waiting for, in my view. I'm not in a position yet. I was yesterday looking at this level here because it was almost a fib level. It was a little bit forced, which is why I didn't take it too seriously, but there was this sort of fib level here. The reason that this wasn't a super strong confluence for me, I love fibs, but this is, as I said, it was forced. So the reason is because I'm using this high here, but that's ignoring this high, it's ignoring this high, it's ignoring these highs, and it's sort of just cherry picking what fits. So it wasn't enough, if that makes sense. As for the data behind it, the euro is struggling. Regardless of what you think about the markets right now, the data is the data. It's not looking good. Euro or European inflation ticked down, I think it was yesterday, which obviously is reinforcing that rate cut in June narrative and throughout 2025. The UK is holding strong. The Bank of England is currently holding rates, waiting for which inflation was it? Just sticky inflation. I can't remember exactly what the exact detail was there. So yeah, Bank of England's holding. European Central Bank is expected to cut. It's pretty much priced in now, to be honest, or is already priced in. But the approach to this would be pretty much the same as what Nick said. It wouldn't be a case of going in for a typical trade like this where you've got the stop loss and take profit down here. That could work, but for this market, as I said, it can be quite choppy, quite noisy. I think that would be a little bit too risky. So I'd quite happily go short if we can come back into this resistance. Short again here, then a final short here, and then again with a take profit all the way down at this next sort of support level. It makes the most sense to me. I don't really see much of another approach there. But yeah, that's pretty much it. It's very smooth, very simple. Royal, yeah, this is the target. So I'd first target the 0.825. ADP wasn't good. ADP is ADP. I don't really care about ADP too much. I think someone else said it earlier in the chat. I can't remember who it was, but it's a bit of a flimsy data point, to be honest. It's not very accurate. It doesn't have much of a prediction for NFP, and it's generally just doesn't mean that much. The dollar overall is really struggling at the moment. I'm currently watching this level just to see, are we going to break below? Are we going to hold? We're very precarious. We've failed to break lower so far. We are seeing bulls fighting their ground, but the case for upside is very limited. I don't think we're really going to see any upside or any significant upside in the dollar until we see more resolution in tariffs. The data for the US actually isn't terrible. It's not necessarily good, but it's definitely not bad. So ADP on here hasn't actually updated yet. No, it hasn't. Yeah, no, it's fine anyway. USD impact 46%. So it's more on the bullish side from a data point of view, but the geopolitical landscape is having a pretty serious impact on euro dollar right now. But I don't really care too much about that yet. Anyway, I could be eating those words soon, but it's fine. Just above average on euro dollar in terms of the average price. So I'm not really too concerned at the moment. Giovanni, thank you very much. Handsome specimen. That's an interesting one. I don't think I've ever been called a handsome specimen in my life. I'll take it though. ADP data comes from a company named Automatic Data Processing Inc. ADP, which is not the best. Yes, that's correct. We do have more news coming though, don't we? Let me just double check what we've got today. Yes, we've got S&P Global Composite PMI, ISM Services Employment Index, ISM Services New Orders Index, ISM Services PMI, ISM Services Prices Paid. That's all in, give or take, about half an hour. So we might have a little bit more fun ahead of us today. You saw me calling Alan handsome. Yeah, Alan is a handsome guy. I like Alan. He's a nice guy. Good person. And a good trader. Okay, right. Let's have a look at some markets. I've not checked Edgefinder's readings today. Let's see if there's anything interesting. Still risk on with the Nasdaq, the Dow, the S&P, and the Russell. The pound is obviously getting a very good reading. Pound Aussie is actually another one that I wanted to take a look at. I've been talking about Pound Aussie for a while, but I just haven't managed to really find anything. It's one of those markets that's just very tricky to pin down an entry because it's very choppy. It can have really nice runs. It's very similar to, is it Aussie New Zealand? I normally compare it to something. I think it's Aussie New Zealand. I can't remember my own comparison. But you can generally see pretty nice runs, but those runs consist of a lot of chop. So you've really got to have sort of an entry and then a relatively wide stop, and then just be able to sit and do nothing for a while, which isn't really my style. I like to be a bit more sort of in and out if possible. Either way, the data's pointing up, the trend is pointing up. The price action is not terrible right now. There is still something we could do here. So in my view, this is the most simple approach. So stop loss below this 200 moving average, below the recent lows, sort of actually more towards here, I guess, just at these lows here. Take profit at the highs, and I think that could be the play. Actually, let me just take a quick look at the Aussie dollar. So my summary says the Australian dollar faces a mildly negative short-term fundamental outlook, while the RBA retains optionally to hike. Weak domestic data, slowing inflation momentum, and fragile external environment point to a constrained monetary policy path. Add this to soft Chinese data and moderating terms of trade, and the balance risks for AUD over the next 1 to 4 weeks tilts bearish. Okay, So it does make sense from sort of a geopolitical side and central bank side as well.
I think right now, I mean, based on this current structure that I see, here is a 30-minute time frame. If you just simply connect the lows, this might be stupidly simple, but if you connect the lows in this market, do you notice that these bulls have stayed intact? Yes or no? Look at this trend line. All I'm doing is connecting the April 7 low with the pullback low. That was that like Monday pullback level, and connect 0.1 to 0.2, and that has propelled this market higher and also provided this barely like this like just sliver of support where this market's just grinding higher. But I don't think it's going to take much to turn the corner. The question is, will we turn the corner, right? Look, today's Wednesday. Guess what happens by Thursday, Friday? By Thursday, by Friday, unless we are going higher to move further away from this trend line, if we go sideways today, Thursday, Friday is the window where I would say, look, this market might start to have an adverse reaction to this. That makes sense? So anyway, keep an eye on this trend line. I think we should watch it. I'm going to go to a 4-point here to make it a little bit more noticeable. And if the time breaks it or price breaks it, two things, right? If we break this just based on sideways price action, well, that's time. That's not really a catalyst to me. But if we have lows that are then breaking down, then sure, we're rediscussing gaps to get filled, previous levels of resistance, and maybe we have a pullback. So again, what are your thoughts? We hitting all-time highs first, or are we going to pull back first? I mean, either way, it's like it can disappoint a lot of traders, right? We go to all-time highs. Everyone that missed out on this dip is going to be disappointed. If we have everyone that's chasing all-time highs and it doesn't get there, everyone that's chasing all-time highs that got in late is going to be disappointed. So it's kind of an interesting situation for the market to cause some pain either way, and it's kind of what I like. In a way, it's like it just gives opportunities, because I'm hoping if that the all-time high chasers are or the bag holders here at the highs, it's like I just like to see a pullback. So anyway, we'll see what happens. Grabbed a few bucks today. We got a big level on the 6,000 handle on the SPX. So I wouldn't be surprised to see us hit 6,000 today. Markets seem to still be moving. I got out for a break even on a bullet spread, took some profit on an iron condor this morning. Here is the trade. So this is now trading for like 60. Yeah, that was up about 20 to 30 cents now. And this one is down to about $1. So yeah, about 50 to 60 cents on that one. So yeah, so far, I mean, it was just a chop fest this morning, which I was kind of happy with. ISM numbers came out better for services. That was the 10 o'clock news day for the U.S. Bank of Canada, did they cut rates? They didn't. I thought they were cutting rates this week. Wait a minute. Huh. Okay, I thought they were cutting rates. I thought ECB tomorrow and Bank of Canada, I thought they were cutting rates to 2.5. Am I like sniffing glue here? Did that happen? I swore I looked at the like Sunday Forex Factor calendar, looked at Monday's trading, like we had a 50 or 25 basis points cut. Huh. Anyway, and oh, okay. I looked at this incorrectly this morning. The ISM numbers, we actually had a sub 50 print for the ISM services. But the market doesn't care, because we're right back up where we started. If you look at price action this morning, this was your reaction to the 10 o'clock news. And 5 minutes later, it's kind of bottomed out, filled the gap. And then here we are right back where we started. So we're above the news candle. I'm telling you, I think 6,000 is likely going to get hit. I've got a pin around 59.90 right now. I'm surprised that thing hasn't taken profit yet. I've got an SPX double up here. I mean, I'm showing like 80 to 100% profit. Let's go. Just give me my trade fill. So dumb. Sometimes those like, it's probably better off if I did like a 10 wide versus 5 wide. Anyway, I'm trying to get a double on the trade. So we'll see what we get. So, I mean, again, correct me if I'm wrong. I could have swore this week on like Monday that the Wednesday Bank of Canada outlook was to have a 25 basis points cut. I know the ECB is supposed to cut tomorrow, so they're looking to cut another 25 basis points. Currency strength today, what's going on? So dollar weaker. Cool. Haven't seen that before. Dollar weaker. Japanese yen is starting to creep its way up. Dollar yen is now near the top of the food chain. Swiss has been Japanese yen, Swiss. You can see how they're moving in tandem. So not a ton of volatility, right? 30 and 45, so not a ton on the vertical axis, but dollar is slipping weaker today. All-time highs are within just a couple of percent. 2.73% from all-time highs on the SPX. And we've got to be even closer on the NASDAQ, 2.4%. The Dow, I think, is still around 6%. 6 or 7 maybe. About 5.9% to the all-time highs. Russell is still double digits. So in 2024, I had quite a good catch-up trade in the Russell, and that was pretty lucrative. This one, I'm not really taking the bait. We're 17% from the all-time highs. I don't know if the market's going to get what they like. I don't know if small caps are going to catch up. I think we're back on the coattails of riding Mag 7, riding large cap again, large cap tech. But we do not have the typical leaders in like a healthy bull market when it's led by utilities and it's led by consumer staples. It's led by financials. It's led by industrials. Like that's an interesting rotation for a bull market. I think we might be on kind of the edge of a bull market, the final final legs of a bull market, but I guess it depends on this whole like beautiful / BS spending bill, which is really not a tax cut but more of a tax extension and a way to still do what the government does best, which is spend a bunch of money, raise deficits, and just spend and print to oblivion. So eventually, I mean, that's what I said yesterday, gold and Bitcoin, good diversifiers. Silver's been performing well this week. So let's take a look at those. So let's go dollar index. 98.85. This should be helping my euro dollar position. I was hoping that euro dollar going into tomorrow's trading. So going into tomorrow's trading, can I get my euro dollar to spike up to this 1500, 1550 zone? I'm looking for a profit target there. I'm still up about 230 pips on the euro dollar trade right now. Let's go other dollar crosses. Aussie dollar. I don't like how this is behaving, although this is open space. Is anybody long Aussie dollar? And if so, what are you doing? Are you long here and then still wanting to buy in at a lower level? Like that's what I would be positioned for. Would be area 1, area 2, stop loss below lows, open space trading up to like 6,900, 7,000. So it's not a bad spot. Euro dollar we did. Pound dollar still grinding higher. I don't like this one as much. I think euro dollar is a cleaner trade. New Zealand dollar also kind of the same thing. Had one pullback here at 58.50, and that's it. I'd like to see another pullback if possible. We pull back to 58.50 and then trade some open space. Area 1, I still like this kind of area 2, stop loss below. Profit target 63.50. Dollar CAD sliding lower. Okay, so what I'll be looking for here would be, I'll just draw a trend line. There's no reason to buy dollar CAD until this trend line breaks. If that is down here, cool. If it's earlier, okay, then I'll look for something on the backside of the trend line and then maybe use this area as my chance to buy support. Oil's been moving up a little bit though, yeah? A little bit. Oil's up just a little bit. If we get above $65.50 or $66, are we coming back up into the 200 moving average? It's been a resistance point, fake out, resistance point multiple times.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.